Those high unemployment numbers yesterday, let's talk about them, eh? With our partners 2 Degrees, this is business. They're keeping pay rates and rises low. What does this really mean? Let's talk to Garth Bray from Business Desk. Garth, good morning.
Good morning, Ryan.
So, good to see you. Nice to be back.
Yeah.
Tell us the numbers yesterday. You've been looking at the labour cost index.
Yeah, because I guess that's part that the Reserve Bank in particular would be taking a close look at, saying, hey, what is this affecting, how's this affecting wage inflation and so on. And what we saw there was about a 2.1% increase. I think it was up about 0.4 in the private sector. And that just shows you, I suppose, that in a time where unemployment is higher than usual, that will be keeping a bit of a ceiling on wage increases. Interesting, Westpac's research unit, they were noticing that pay increases, 44% of people won't have had a pay rise since last year.
Yeah.
And that is the biggest share of those who haven't had one since 2021. So all that period of inflation that we had and so on before then, it's all been pegged back. I guess on the downside, and that would sort of suggest that, when they're looking at the OCR, it'll be 25 basis point cut on the 26th. End of the month.
All right.
Little note there about the BNZ though. They're saying, hey, that that suggests there could be a bit of weakness. Drop in the participation rate means that maybe people with skills are leaving, and that's going to hurt things on the upside when we start to recover. That might mean inflation creeps in a little bit more quickly.
Yeah,
down the road problem.
Right, let's talk about the sick leave numbers. I did this morning on News Talk ZB. So we're taking, on average, each of us an extra day a year sick leave since they changed the rules from 5 to 10.
Yeah. And that's costing businesses probably, it was about $600 to $1,000 a year. It's probably more like about $1,300 at the moment.
Okay.
And so that's, there's
another cost.
There's a question though whether it's, I think, Shamabil Jacob in our piece that's covering this said, hey, look, we've seen a drop in the number of holiday days taken, so maybe people were just taking annual leave to cover their sickness and they're just switching it around.
I spoke to the Employers Manufacturers Association about this morning, and they said actually they think people are genuinely sick. It's just that we weren't taking sick days before when we should have been.
Limping around like zombies and slowing down and pretending to work, but not really.
Infecting others.
Finally
this morning, you've got some praise for ACC.
Yeah, look, we've our markets reporter, Rebecca Stevenson's taken a deep dive there, had a word with their unit that's taking a close look at New Zealand's small and micro cap stocks. We've all heard this week about ACC cutting back on water safety ads and support and all that kind of stuff. But in the background, they've also got a unit that looks at good investments, got about $51 billion worth of assets under management. And they are looking at the minnows on the New Zealand Stock Exchange and going and meeting them and talking to the managers and working out which ones are good takeover targets. And they've built up a portfolio of about $180 million worth of small and micro cap stocks. It's an area that, like most of the big investment firms, don't cover anymore. They don't get a lot of love.
Yeah.
But it's quite fascinating. We talked, I think, recently about how they made $10 million off restaurant brands.
Yeah.
And so
they're making lots of money.
They're making a bit of money in there. And
well.
it's
very good.
Couldn't give investment advice, but it might be worth taking a look at what they're taking a look at.